You are listening to ChartingWealth.com's weekly review and forecast for the week beginning Monday, the 30th of November, the last day of the month, 2015, as we go into the last month of the year. Now, let's look at IYY. What is IYY? Well, it's the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. What does it do? Well, it represents the entire market, the total market. What do we see going on as we slip from the 11th month into the 12th month? We look first at the week. Well, this is the one time of the week, every week, that we actually review a bigger chart than our two-day chart, which is what we review every day of the week. For those of you who don't listen to our daily review, I encourage you to do so. We see that the market turned over going up beginning, in the week ending on the 23rd of October. So we switched over and we have seen the market. It climbed for a few weeks and then was down a couple of weeks, the 16th and the 13th of November, and then ended up for this past week ending the 27th of November. But the market is not up strongly. Yes, it did rotate over that week ending on the 23rd of October, but not a strong push up. We saw a big down move, of course, in the market back on August the 28th when we had a huge down move, and the market still has not recovered up to, well, it's just now recovered actually, up to about where it was before that big down move. It's sort of been sliding along. It hit that mark back on the week ending on the 6th of November, dropped off a little bit, and has now tried to gain that back up, but still, again, is sliding sideways in a lot of ways. We are up again on the big chart. The derivative oscillator is still in the green positive territory. We always then look at how did the week shape up on the daily chart? Well, it started the week on the 23rd. It was a red open candle, a down candle, almost a spinning top on Tuesday the 24th, and then up moves on Thursday. That would have been Wednesday and Friday. Remember, it was a holiday week, so the market wasn't open, of course, on Thanksgiving Day. So it's sort of what we would have expected, a pretty quiet market. Never went above the high that it reached on actually Monday, even though Monday was an open red candle day. Now, again, sort of slid sideways. Where is it though? Well, it crossed over around the 27th going up, and we have a positive derivative oscillator on the daily chart. So we have the big chart, the weekly chart up, and the daily chart up on the total market. Now we're going to revert back to our weekly chart. We're going to take a look at the S&P 500. For the day, that is for the day ending on Friday, it was up technically 0.11%, total market up 0.02%, so not big up moves or anything. But what do we see on the S&P 500? It crossed over on the week ending on the 23rd of October, as did the total market, and had actually been trending up 2 weeks prior to that, and moved on up until the week of about the 6th of November, lost some steam, and then started moving up again over the past week, although it's still not reached the high that it reached on the 6th, sort of recouping where the market was way back before it took a big downturn the week ending the 21st of August, and of course then that big down move on the week ending the 28th of August. So just retracing some of those, but again confirmed up moves on the weekly chart rather, and we see that the derivative oscillator is in the positive. If we go to the daily chart, what do we see? Well, similar to what we saw in IYY, market never reached as high as it reached on Monday. For the rest of the week, sort of slid sideways, as one might expect on a holiday week ending. So now let's go back to the weekly chart and we'll check out where the Qs have been. Now the Qs, of course, is the power shares QQQ Trust, what is that? That is a representative of the NASDAQ 100. It shows you what those stocks are doing in the technology arena. What do we see happening? Well, it also crossed over going up back on the week ending the 23rd of October, ticked up for the next 2 weeks, and sort of gave us spinning tops on the 13th, week ending the 13th and the 20th of November, and then pushed back up over the course of the prior week, the holiday week. Now we do see that it's still never risen above where it was on the 6th of November, even though we have a higher high on our MACD, our moving average convergence divergence. We don't have a higher high as far as price goes. That is a divergence. That could show you that that's really not going to hold very long, but we'll have to see. It's typically what you'll hear from chart readers. And if we go to the daily chart, what do we see? Well, we see the daily chart is still in a confirmed down move. And even though there has been up movement over the last couple of days of the week, and again, chart looks pretty similar. The 23rd, it reached the highest that it did for the week. Rest of the week, not a lot of up move. Market is still above its 2-day trend line on the daily chart. Daily is in positive territory on the derivative oscillator, but again, in negative territory on the MACD. That's where we are on the Qs. So again, pay close attention. Listen to our daily review and forecast because there's some interesting things shaping up on the Qs. It just moved into negative territory on the 2-day chart also. So if you start seeing some short-term down moves, might be a good reason to look at either probably a good down play in the Qs. Of course, for us, we can always look at an inverse NASDAQ. I love QID if you're interested in getting into any kind of reverse indexes. And again, what are we talking about? Are we talking about real money? No, we're talking about training, talking about you getting out there, opening up an online brokerage account, firing it up with some virtual cash and doing some virtual trading to make sure that you learn and understand what it is we're talking about by doing some virtual trades and actually making real money before you start making your own decisions with your money. Now, lastly, I'm going to range back out to our weekly chart and we're going to look at gold. Gold was down for the day on Friday, 1.18%, and gold has been down quite a while since it crossed over going down, actually even before the 6th of November, the week ending then. On the week ending the 30th of October, started its down move and has gone down precipitously. It has ended the week on a line that we drew just a while back, saying that that might actually be the bottom on gold, and we'll just have to see if indeed that holds. It's holding right now for us on the weekly chart. So let's continue to pay attention to that. Will gold stop as far as its down movement goes there? We'll just have to wait and see. It's given us some clues that it might do that. If we look at the daily chart, what do we see on gold? Well, we see that gold is moving down, has sort of been moving sideways since about the 16th, 17th of November, and has continued to move sideways and then dropped right over off the deep end on Friday. So we'll continue to pay attention and watch what gold is up to. It is defying our 4-hour chart, which we have used so well and profitably for the last many, many months, and that is disturbing me because that chart was so good for us. When you find a chart, you use it till when? It doesn't work anymore. Now, lastly, let's do what we do only once a week, and that's only on the weekly review and forecast. And what is that? We look at what some of the news was over the weekend. Again, I'm going to use part of this to show you that what does the news really mean? Who the hell knows what the news really means? When we look at what happened over the course of the week ending the 27th of November, we see that the U.S.'s Q3 growth was revised upwardly, a little over 2%. We see that Japan responded to the latest recession they're suffering with fresh stimulus. We see Eurozone confidence appears to continue to be high. And U.S. consumers are saving rather than spending. Now, why is that? Well, according to The Economist, the U.S. economy grew 2.1%. It kept that pace in the third quarter. U.S. consumers, though, are spending very little. Their spending has barely budged going into the holiday season. Well, actually, wrapping up in October as we get into November, and then the holiday season. Again, these are all lagging indicators. U.S. consumer confidence. Guess what? Oh, wait a minute. We just heard that growth is up. Consumers should be thankful because of things like home sales being up, like jobless claims falling. But what is happening with the consumers themselves? Well, guess what? Their confidence has dipped. The Conference Board's Consumer Confidence Index fell November to its lowest level in more than a year. Now think about that. Supposedly, things are getting better and rosier, but the public doesn't feel that way. Are they really? Well, durable goods orders are rising, but business spending is saying that orders are jumping. U.S. home sale data is somewhat mixed. Sale of new U.S. homes surged in October. However, existing home sales fell. We see home prices rising a little over 5%. And like I said, weekly jobless claims are down. Japan announces more worker-focused stimulus. Europe economic confidence remains at a 4-year high, even with the hordes from the east coming in. Interesting, isn't it? So what's really going on, and what does it mean for the market? Well, that's why we say over and over and over again, pay attention to the charts, not the noise. You can listen to this noise all day long and think everything is swell or everything is terrible. The only thing that matters as far as your investing goes is what the charts say. Okay, my friends, what the charts say. That's what you need to pay attention to. That's what we talk about over and over and over and over and over and over and over again. The charts, not the noise. And the noise is the media. And the noise is sometimes just things that you think ought to matter but don't matter. The only thing that matters is how the market takes the news, right? Let's talk about what's happening this next week. You're going to see on Monday, China's going to report its Manufacturing Purchasing Managers Index. How will that affect things? Unless it's something hugely bad, probably not that much, unless the market locks onto it. What happens on Tuesday? Well, we're going to see U.S. manufacturing data is going to be reported. That's something you could listen out for. How about on Thursday? You're going to see U.S. service sector data is going to be released. Again, that could be something to just sort of listen out for. Also on Thursday, European Union is going to report its composite PMI. And then finally on Friday, the European Union is going to report its gross domestic product on Friday. So pay attention to those things. No big Fed earth-shattering news coming out. Holiday season's upon us. Pay attention to those things, but most importantly, learn how to read a stock chart. Get our charting layout. Both of those things you can get for free. Our 15-minute How to Read a Stock Chart video, and you can get our charting layout by doing one thing, going to chartingwealth.com, signing up for 2 things. Well, all you got to do is sign up. What you get is our daily review and forecast, and then once a week, our weekly review and forecast. And for free, you will get links to our charting layout from freestockcharts.com. All you got to do is hit that link. It'll pull you right up into freestockcharts.com, and there you'll have our layout ready for you. In addition to that, you'll get the link to our 15-minute How to Read a Stock Chart video. We'd love your feedback on all these items. Please follow us on Facebook, Twitter. Oh gosh, you can follow us on Google+. You can follow us on YouTube. You can follow us on SoundCloud. We appreciate all of it, and Instagram too. Thanks so much from chartingwealth.com.